Let's walk through the final exam, practice 1. I'll preview the quiz. Canvas calls it a quiz. This is a draft, but it's what the final is going to look like. The actual exam will consist of these questions. Students should work practice exams and let me know if you're having any problems with your computer working these. I would strongly recommend you pay attention to where you're saving your files. Please submit the files before the time expires. If you have to email me your file after the time expires because you barely missed it, I will accept it, but take off 10 points because it causes me tremendous headache to try to put that back in with the rest of the files so I can grade them as a group. So question 1, as you know, this is where we will download the most recent 10K from some company, and it looks like that company is going to be Ralph Lauren Corp, RL. We'll put it in this file. I'll go ahead and download this now so it can be opening. And then I'll go out to sec.gov/Edgar. And I want to do a company filing search for RL. And I can't see it here. But if I hit escape, then Ralph Lauren Corp. RL, that's exactly what we're looking for. We're looking for a 10K, so I'll expand that. And if it didn't show up on this list, then I would view all 10Ks and 10Qs. And I would look for the most recent 10K annual report. Click on Filing. Click on Interactive Data. And click on View Excel Document. And that downloads the data that I'm looking for. Now we get to play this fun game of deciding what's really a balance sheet. It's not the parenthetical because that doesn't have the total assets and total liabilities and equities that we're looking for. Let's check out consolidated balance sheets. There's total liabilities and total equity that we're looking for. I'm going to go ahead and color that so I don't lose it. Now we're looking for an income statement. Let's not get distracted by the statement of comprehensive income because it starts with net income instead of finishes with it. Let's come back to this one that starts with revenues, takes off some expenses, eventually gets down to some net income. Has a little bit of other per share information below, but this is the one we want. That's our income statement. This looks like it might be a cash flow statement. It starts with net income and takes off depreciation and eventually tells us the cash provided from operating, investing, and financing activities. Great, that's the one we want, so we'll color it yellow. And then just in case I mess these up, I'm going to take that one, control that one, control that one. Just in case I mess them up, I'll make a copy as I put them in a new book. Now I just need to get them all on the same sheet. So I want to start, I'm going to start with the cash flows. Go to this bottom cell, do a Control-Shift-Home, cut that. I'm going to paste it beneath the balance sheet data, leave a blank line there. Then I'm going to do the same thing again. Well, make sure that lines up. So 20 and 20, 19 and 19. I'll come here, Control-Shift-Home, cut. Go to the income statement, leave a blank line, and paste. Now I cut those this time because I want to make sure I don't double dip so I don't come back to some sheet and put it in there again. I've been known to do that. So now I've got all 3 statements aligned top to bottom. I'm going to look at these years and make sure they align. And they do. So I'm going to just cut the entire columns, or copy the entire columns over into that template. Thought I downloaded that template. Here it was. Whoa, that looks a little bit different, but we were promised we'd get some additional information. So I'm going to come over here and paste. And let's look at the additional information. Actually, let's go read the problem. It says download the most recent 10K. We did that. Use it to complete the pro forma template above. Okay, for full credit, you must arrange and paste data to the right of the template like we did. Follow any additional directions at the top of the template. Use formulas to populate the shaded history. That's our blue. so that the instructor can grade that using formulas to trace precedent. using formulas to trace precedent. Calculate subtotals and totals. These are the non-shaded cells on the IS and BS. Excuse me. But not refer within the template. Don't refer to the Edgar data for those subtotals. The one exception might be depending on how PP&E gets reported. We might do it a little bit differently, but I think that rule is still going to apply. And we want to use only Edgar data or whatever excerpts are provided above, and then submit the file here. Do not insert or delete any cells, rows, or columns, or we will receive 0 credit on this question. Answers must be in expected cells. That's going to help the instructor grade over 100 of these within a few days. Now, one thing that we need to be sure to do so we can copy this forward, we'd like to cut, but watch what happens if I try to cut that column. Can't do a merge cell, so I'm going to select them all and take off that merging. It's going to mess up a cell or two like this one, but that's okay. Now I can cut and paste insert, cut and paste insert. And let's see what kind of extra instructions we were given. Since impairments and restructuring charges are shown above operating income, include them in SG&A and other. What does that mean? Let's see. This all looks normal until I get to these two. And they're shown above operating income, so he wants us to include those with SG&A and other here on row 30 of the template. Okay, can remember that. Excerpt from the MD&A says that within SG&A is included depreciation and amortization. Okay, can remember that. Note 5 says, oh, here are all of our assets, gross costs, totaled up gross costs, less accumulated depreciation, gets us to PP&E net. Okay. Well, I have spent just about 7.5 minutes getting ready to do this, and I think that the time spent up front is well spent. I'll do one more thing to get me even more ready. I'm going to push these down with Control-Shift+ to insert those cells down. So I'm working a little bit more left to right here. Wow, look at all those borders that the instructor put on here for us in case we want to use this later. We won't be tempted to forecast them during the exam, but we could go to borders and take off these diagonal borders if we wanted to use this template after the exam. But for now, it's pretty clear we just need to do this part and stop, and this part and stop, and not do anything down here. So now I'm up to almost 8.5 minutes of prep time for this, and I believe prep time usually pays off well. So we've gotten ourselves oriented. Now we're ready to say sales are here, cost of goods sold are here, and it looks like I don't need a negative sign because they're outflows. So we can calculate our gross profit. SG&A, remember from above, said include the SG&A and also these extra 2 lines. And then we can calculate our EBITDA. Now, I believe we're also supposed to take depreciation out of this number, but we'll do it now. So if depreciation is not over here, then I can grab it from down here on the, it's always the second line of the consolidated statement of cash flows, D&A, but that's a positive number and I need it to be an outflow. Even though it's not in cash, it still detracts from our net income. And if I took it out there, minus L100, I want to make this 3.2 smaller by about 0.3. So if I do my math right, if I subtract L100, make sure that was L100, then I went the wrong direction. So I'm going to go back and add it. And we'll find out here in a moment if that worked correctly. If I look at the EBIT, I got lucky. They happen to show operating income on here, which we call EBIT, and we got the same number. So I think I got all that right. Now, interest expense and interest income are both shown on here, with expense being an outflow is negative. So we can sum those two for net interest expense, and then for our other operating expense, it looks like we have other income expense net, just that one. So this time if I were going to sum, I'd have to start with EBIT and take off that net interest expense and other operating expense and get my income tax provision. And my net income now is going to be those two. So see if 162.8 matches, and it does. And now let's copy those forward with a Control-R and see if 430 and 384.3 match, and they do. So dividends, we need that outflow from the financing activities, payment of dividends. It's already negative because it was a use of cash on the cash flow statement. And then our retained earnings, just going to be the sum of those two. Since Ralph Lauren is a family-owned company, this year they gave almost all the net income to the owners. Mostly family-owned. To have a public float or we wouldn't be doing this. We can pick up our share count basic and our share count diluted. And we are 11 and a half minutes into this and have our income statement done. Now let's do our balance sheet. So cash is going to be cash and equivalents and short-term investments. Also look like cash and marketable securities. And then accounts receivable, we have a row for that. We have one for inventories. And then for other, it's probably going to be income tax receivable, prepaid. I don't want to add total current assets, but this would be a good time to check. Just going to highlight and see if 3594.8 matches. But I don't want to subtotal it that way because we need to keep our cash separate. So I'll just subtotal those. And then my fixed assets at cost. I remember that was upstairs. And thank you, Braxton, for pointing out that if I put these numbers in Excel for you, you won't have to type them in, but you might have to change the order. So if I cut that, Control Shift plus, I'll get them in the right order. So I need H19 for gross, H20 for accumulated depreciation. So H19, H20, let's sum those and see if we get the right answer. In fact, let's check both years while we're at it. Control R. 1039.2, 979.5, and then that leaves us with our, and let's double check those numbers up here, 1039.2, 979.5. Just don't get confused about the order there. Other non-current assets. I don't know if I need a sum. I don't know how many there were. Let's see. Got that, and now we're ready to move to this. Don't skip that 0 just because it's a 0, because we'll need it in the following year. Goodwill, other assets net, other non-current assets. Don't fall into this trap of saying, oh look, other non-current assets, those must be exactly the same thing because we need to group these others that we didn't use anywhere else into other non-current assets. And then if we sum our cash, our current assets excluding cash, and our net fixed assets and our other non-current assets, we should get 5942.8. And if we do a Control R, 7279.9. So we're probably good on the asset side. Accounts payable. That'd be a current liability. Now we're not going to pick up these short-term debts. We're going to throw them in with our debt. But accounts payable is going to be here. Other current liabilities could be things like income tax payable, current operating lease liabilities, accrued expenses. And if I say sum that, if I add those, whoa, auto sum's not too smart on that one. If I add those together, then our debt's going to throw us off, so I can't match that number. And this number only matches because these happen to be 0 there, but I shouldn't expect a match. Now debt should be these two pieces of short-term debt we talked about, along with the long-term debt. And the other non-current should be pretty much everything else. Should be our operating lease liabilities, tax payable, tax benefits, other non-current. And then that's just a header. I don't have a number in either of these two rows. So my total liabilities should be 2655.6 and 4586.8. Now let's do stock. We look at which things look like stock. Paid in capital kind of feels like equity, and treasury stock feels like stock. If we don't get these perfect, it's not going to mess up our model too badly. But let's do the best we can and get retained earnings and other accumulated other comprehensive loss is just like a negative retained earnings, but for some reason they report it separately. And then if we add these two together, we should get 3287.2, 3285.9. This one is a little bit tricky. Let's look at the next year and see where we get. We were good on assets and liabilities, but it's this equities that's given us trouble. In fact, as I look down below the total liabilities and equities, it jumps out at me that there's some common stock that we didn't pick up. And there's some common stock. This is the price we pay for bringing this data in from Edgar. We might have to look a little bit harder to get things to balance. Now, what I see some students do is go ahead and just add that in. They say, well, I need this row and this row and this row. And if I do that, I'm not balanced. I think I might have double dipped something there. Student might say, I need total liabilities plus total equity, and add the parentheses. We're a little bit out of balance, so they'll say, oh, look, I need this 1.3, and they'll add it in here. That plus this, but watch what happens. Even though I balance, these numbers don't add up. If I got out my pencil and paper and added this to this, I wouldn't get that. So I can't add these in here. I cut them, and they're equities, so I have to add them. Can't even add them here because then these two wouldn't add up. But if I'll come up here, it looks like they're stock, so I'm going to add them in to the stock, and then I balance. And if I copy that forward, copy this forward, then I balance. Okay, that's about 18, 15, about 18 and a half minutes into the exam. So we'll hit save on this. Probably should have saved it before, early and often. And then upload that. Now, as the instructor, I don't know if I can upload that file, and I'm not going to do that here, but I'll ramble long enough to give you time to upload that file. So by the time we get to question 2, I'm about almost 19 minutes into the exam.